going on, everybody? If you've ever struggled with finding the daily bias, then this video is for you. It's a really super simple way to see the market and figure out which direction we're going to go. It doesn't involve a bunch of indicators or crazy higher time frames or fib levels or anything like that. Really, really easy. And after this, you should be able to get the bias right every day. This clip is from a class that I do for free in my Discord every Saturday. There's a link in my bio if you want to join up for that. But yeah, let's waste no more time and get into it. Practice doesn't make perfect. Perfect practice makes improvements. Yeah, that's basically what I was trying to say. I just didn't do very good at it, but you did, so thanks. That's my wife. All right, let's get into it. So we all know, most of us in here anyway, we all know how we like to find the bias, right? We like to use inverse fair value gaps for our bias. So when we have this big bullish gap right here, right? Boom. If we expect price to remain bullish, we do not want to see price close below. Price needs to bounce out of this gap, right? That's how we determine our bias on the higher time frame. But listen, the mistake I feel like a lot of people make is go, oh, okay, all right, well, we just inverse this big bullish gap. That must mean we're bearish to this low. And like, although that might be true, you have to zoom in time frames, right? Because there's always going to be something on a lower time frame that we can bounce out of, right? So for us, the way we trade, most of us are not swing traders, right? Most of us are executing on the lower time frame. So for us and the way we trade, I don't marry the higher time frame inverses, to be honest, because there's always a lower time frame gap that can likely hold or reject, right? Just because we inverse a big 4-hour gap does not mean, oh, okay, we're just going to go to the low now. So during the day when we're trading, right, I need to know short-term bias. Yes, the higher time frame bias matters, but like, I need to see how we're reacting on lower time frames. Why? Because we're executing on lower time frames. I'm going to use the 5-minute, the 15-minute. You know, those are going to be the time frames that I use for my bias during the day while we're trading. Like, just because we inverse a big 4-hour, 1-hour gap, I need to make sure there's nothing on the lower time frame, right? So I genuinely use my bias 15-minute, 5-minute during the day while we're trading. You know what I'm saying? Let's just figure out our bias for the week. Right now, what do we got? Well, we have this big, huge 30-minute gap to the left that has been doing what? Holding price down. All right? Now, this is a good example. Just because we close above this 30-minute gap does not mean that we're going to go to these highs. You would think that, but what do you see? Another bearish gap, right? So we could easily push up just because we inverse this gap does not mean we will inverse this gap too, especially the last gap in the leg. These are always the toughest to break. So it's really, really important not to marry a bias. So especially with the way price action's been lately, there's genuinely no need to marry a certain bias. Like, we can catch shorts or longs, genuinely. When we have all these different gaps that we're putting in, we got bullish runs, then we got bearish runs. Like this, you can short or long in this market right now, genuinely. So yes, it is important to show up, pull up the 4-hour chart and be like, all right, where are we at? Okay, right now, well, what was the most recent aggressive move? Okay, most recent aggressive move is this. So I'm going to not only mark these out, but I can also take my fib, go from here to here, and see how we're reacting to 50%. Okay, this is not really too telling to me. See how we actually did end up inversing this daily gap? So what are we all going to assume? If we inverse this daily gap, we would be like, okay, we should go to this high now. But that's why you zoom in. Look how big this 4-hour gap is. So right now, looking at the 30-minute chart, I'm definitely leaning more bullish. I know we're holding this big 4-hour gap and the 1-hour gap, but on the 30-minute chart, oops, that's 30-second. 30-minute chart, what do you guys notice? This big, huge 30-minute gap. Look how many times we've bounced out of this. 1, 2, 3, right? So when I see something like this, not only does this gap hold a bunch, but this gap sends us to take buy side, right? Now we come back, tap back into this 30-minute, and look at this reaction out of here. Really, really bullish reaction out of tapping into this gap. Dream scenario going into this week, this 1-hour gap holds. We get a pullback, tap back into this 30-minute, and look for longs to hold for the rest of the month. Dang, you guys. I haven't done one of these in so long. I feel so bad at it now. But then, looking at the 4-hour chart, I would like to lean more bearish to start the week, yes. Not to mention, looking at the higher time frame, this does look pretty sell model-y. So I don't mind looking for shorts to start the week. But my only condition is that 30-minute. Okay, so let me take that back. I'm bearish pending this 30-minute gap, if that makes sense. 4-hour LRLR looks good after we take more lows. Yeah, there's a ton of good buy side, but I genuinely want all this swept, right? But just because that's what I want doesn't mean that's what we're going to get. So I have to give myself conditions going into the week. What's my condition? Well, I'll drop down to the 30-minute, not the 4-hour, because we're not trading. We're not higher time frame traders. We're not swing traders. We're not worried about that. What do I see on the 30-minute? I see this big obvious gap that we've bounced out of a ton of times. So my condition, not my bias, my condition is that 30-minute gap. Just because I say, oh, I'm bullish, I'm bearish, I mean, that's cool and all, but I have to go off what I see on the chart. And what I see on the chart is this 30-minute gap is the most recent gap to look at. Most recent relevant gap to look at, right? Because we've bounced out of it so many times. We swept a ton of LRLR right above it, put in all this LRLR, right? Swept the highs, came down, swept all these, and then this candle out of here is what does it for me. Like, we get a crazy 30-minute BPR out of this 30-minute gap, right? So I could even take longs from here. Wouldn't mind that at all. Overall, when I look at the higher time frame, I'm like leaning more bearish, low key. I'm leaning more bearish. So that's why instead of just marrying one or the other, I'm going to set the condition. What's my condition? This 30-minute gap. If we close below this 30-minute gap, then we're going to go take these lows, I think. But then what? Anybody see something else right below this one? We got this big 30-minute gap, huge 30-minute gap. That's done what? We've shot straight out of it. So I want to be bearish because of higher time frame, but right now we're respecting both sides. So that's why I'm saying don't marry one side or the other. Like, if there's good targets below and we have bearish delivery to the left, it makes sense. If there's good buy side above and we have bullish delivery, it makes sense. I'm not stuck on one direction right now. Dude, you guys, if you ever see us have all these lows get put in, we rip up, take buy side, get an inverse with an OB down, and then we don't take the lows and shoot straight back up, don't trade that day. Like, if you see this, just don't trade that day. So yeah, I mean, I feel like most of us have a pretty good understanding of using inverses or non-inverses for our bias. But the thing I wanted to point out most was the time frames. Like, using lower time frames to find our near-term bias, our short-term bias, right? Just because we inverse a big 1-hour gap up, here's a good example. We inverse both these 1-hour gaps, right, all in one candle. So when we see that, we're like, oh yeah, we're bullish to the highs. We're bullish to the 1-hour highs. But what happened? We tapped into another 1-hour gap here, and price got wrecked. So yes, it's good to read the chart and do analysis, but marrying higher time frame inverses is not ideal. Not for intraday trading. Let me just say that. I would not use higher time frame inverses to determine your intraday trading bias, like, at all. So honestly, I think if we inverse this 15-minute, I think we go for the lows. Why? Because when I'm zooming in, I'm not really seeing too much that would change that. All right. If market opens on Sunday and this 1 minute gets inversed, I'm going to short that shit all the way down to this LRLR 1,000%. Now, this is an inverse that I will definitely, if there's an inverse to marry, it's this one. Yep. Down to this 15-minute gap. So this is not financial advice, but that's my plan. If we get that, I'm taking it. Unless we get some crazy gap. Here's another good example. See how price V-shaped this 15-minute? Oh, well, we should go to the highs now. But we don't. Why? Let's see. Let's find out why. Must be just because of the 30-minute, honestly. Let's check for an SMT. 30-minute SMTs. We like to see that. Okay. Now if that 1 minute inverses for sure. That we have an SMT too. Can't argue with that. But yeah, honestly, that's pretty much it. That's really all I do. Like, I just use 30-minute, 15-minute, 5-minute. Those are the time frames you need to use for your bias intraday trading. The 30-minute is one of my favorites to look at for intraday bias. I love looking at the 30-minute. It's solid. I converted you on it. Yeah, I'm telling you, the 30-minute is. But just use delivery and inverses. That's it. Like, if we have this bearish gap, okay, cool. If we tap the bearish gap, how do we react? Does it hold or do we inverse it? That's all you gotta do. I think next week I'm gonna do order blocks. Out of a 30-minute tap, you drill down to a 3-minute. Yeah. So let's say I'm trying to look for a setup and I'm like, okay, where's our liquidity at? Here, let's go back. Where's the replay? All right, let's go back. So if I'm looking at this chart, right, here's a 30-minute chart. And I'm like, all right, what do we got here? We got this 30-minute bearish gap. All right. If we're not going to inverse this gap, what do I need to do? Well, I need to look for sell side targets in case we don't want to inverse. So we got this, all these, right? So I'm like, okay, here's my targets. Here's my liquidity. Now, anywhere near this liquidity, is there a really obvious gap that we've bounced from? Well, when I look at this stuff, no, not really. But when I look over here and I see this big gap, I'm like, all right, let's mark that out. So we draw this out, right? What do we get? A tap it. Gosh dang it. Come down. Right? We tap this little 30-minute gap. We get this 2-minute inverse here. Can't work with real orders. I'm not trying to work with real orders. I'm trying to paper trade, yo. What are you doing? Let's try that. So, right? We get the liquidity sweep. We get the 30-minute tap. Bang. You know, we're just money printers. I'm kidding. So, but yeah, higher time frame delivery, higher time frame liquidity sweep, lower time frame entry. So once we get the sweep on liquidity, we tap into this 30-minute gap. I gotta go to the lower time frame for my entry. And by the way, streams will be back on Monday. All right, everybody. Have a good weekend. Enjoy not looking at charts and be ready on Monday.